Hi, I'm Mike Capizzola from the Investing Channel, and welcome to IPGo, the show where we take a look at the IPO world, past, present, and future. U.S. markets broke for the 4th of July holiday last week, but long weekend or not, there was no shortage of excitement in the new issues market, and much of that was due to Chinese stock listings in the U.S. However, there were very mixed fortunes among this group. To the upside, Pop Culture Group, a hip-hop-oriented events planning and media group, sold 6.20 million shares at $6 a share, raising $37.20 million in new cash before fees, listing on NASDAQ. Though hip-hop and mainland China seem unlikely bedfellows, the company's online dance and music content generated 264 million views between March 2020 and the end of January 2021. The advertising potential of those kinds of audience numbers struck a chord with retail traders, and Pop Culture Group quickly became a meme stock, with its shares trading at $12.26 on the open before hitting a peak of $78 on day two. The stock has fallen back to trade around $27, though that's still more than 4 times higher than the IPO price. Another Sino-American IPO that's caught the market's attention was ride-hailing app DiDi Global, which came to the market with a hefty valuation around $70 billion. The company, which was billed as the Uber of China, raised $4.40 billion by selling 317 million ADS, or American Depositary Shares, at $14 a pop. In fact, the company increased the size of its offering from an original 288 million ADS in the face of excess demand for the IPO, which was said to be oversubscribed multiple times. The stock opened at $16.65, a 19% jump above the offer price, and it went on to briefly trade up to $18. However, that was as good as it got for DiDi, because no sooner had the stock listed than the ominously named Cyber Administration of China insisted that the ride-hailing app be withdrawn from app stores in China on concerns about data security. The shares went into freefall, and over the next 3 days would trade down to $11.58. Media reports have since suggested that DiDi may have ignored advice to defer its IPO until the data security issues were resolved to the satisfaction of Chinese regulators. Understandably, investors are demanding answers, but it seems likely that the Chinese government acted to clip the wings of the high-flying IPO in a similar way that it moved to derail the IPO of Ant Group in the autumn of 2020. The latest moves were likely designed to exert control and to steer large IPOs away from the U.S. and back towards Chinese domestic markets. Elsewhere, the shine has also been knocked off of payments app Marqeta, which listed with a fanfare of publicity 1 month ago. Marqeta sold more than 45 million shares at $27, well above its indicated price range of $20 to $24. The stock finished day one at $30.52, having briefly touched $32.75. However, it's been downhill since then, with the stock trading down to $27.33 and looking capable of breaking below its IPO price. There have been some success stories in recent weeks, however, and you may recall that we highlighted AI-driven cybersecurity group SentinelOne in a previous edition of IPGo. The stock priced at $35, having originally indicated a range between $26 and $29. The company sold 32 million shares and could have sold many more, as it opened at $46 on debut and has traded as high as $54.05. A textbook example of the right stock coming to the market at the right time and capturing investor zeitgeist as it did so. Contrast that with Krispy Kreme, which came to the market at $17, well below the anticipated range of $21 to $24 a share. The stock briefly traded up to as high as $21.69 on debut, but has subsequently fallen back to just above the IPO price. We questioned the proposed valuation of the donut and sweet treat brand ahead of the IPO, and the market seems to have shared our view. The takeaway here is that you can't force the valuation of a stock if the demand for the name isn't there, and that for the moment, IPOs have become a stock picker's market once more. That's all we have time for today, but as usual, make sure you do your own due diligence before making any investment decisions.